The broadcast is now starting. All attendees are in listen-only mode.
Hey, folks, hello. Welcome to today's presentation where we will be discussing deal sourcing. And more specifically, we're going to unveil for you a better way to monitor your target companies. It's a strategy that we're calling a watch list 2.0 because it incorporates tech, really as a way to make your job of deal sourcing easier and more effective. And so why are we putting this together? Well, the reason is that we're hearing more deal makers and buyers say that it's just getting harder and harder to reach their target company CEOs who have probably already been bombarded with 20 other calls from other junior analysts who are all making their own pitch. So the market is obviously getting hyper competitive. So what we like to do is just cover how you can stick out from the crowd, and really in a way where the answer isn't just hire more business development staff or hire more analysts to crank out calls, because what we're going to argue is that that's the dinosaur way of doing things, and there's a better way of doing this. So you'll hear from two deal sourcing pros today as well who are perfecting this watch list 2.0 strategy. I will introduce you to both of them in just a bit. Before I do that, allow me to introduce myself and just breeze through some quick housekeeping. So I'm Nick Donato. I'm an industry strategist here at Navitor, which is the premier cloud software provider for the private markets. What we do is we offer private equity firms and strategic buyers and others a platform to manage their deals, manage their investors, and manage their business development efforts. Should you have any questions during today's presentation, and I encourage questions, by all means, send them our way. There should be a go-to webinar tool that should be on your screen there. And what I've done is I'll just reserve some time at the end for us to field them. Also, a quick FYI, we will make sure to send out a recording of today's broadcast. I know that question comes up a lot, so just look for that in your inbox in the coming days. Now, moving on to the next slide. You may be wondering what gives Navitar credibility on this deal sourcing topic. And the short answer is that we work with hundreds of buyers every day on how to tweak and how to refine their deal origination strategies. And then what we do is we provide the technology and we provide the right integrations to make those new refined strategies even possible. So what we like to do is we like to leverage that experience with you here today, because if right now your strategy is to download a list of companies from a third-party provider and then just begin cranking out the calls and the emails, you will soon find yourself falling further and further behind the curve. Navatar, by the way, has over 600 customers across 35 countries, and that both of those numbers are growing. We are a Salesforce Gold ISV partner, and we integrate with Box, which means that, well, really what we've done is we've taken the two most trusted names in cloud security and configured them for your business model, meaning that everything comes ready out of the box. And of course, we have with us here today our valued partners at DataFox. And so what DataFox does is a number of neat things. Well, first, it's a massive private company database. So it allows your associates and your analysts to find the right target companies by searching over 40 firmographic data points, including things like industry or headcount or location. But even more impressive is that it then helps you score which target companies are right for reaching out by tracking all their developments, all of their news developments, like if there's a new CFO hire or if they open up a new office, it will feed you that information automatically. And then finally, it helps you find the most relevant conferences and even tells you which conference a particular target is attending. So all those points are actually going to be part of the watch list 2.0 that we're going to describe here today. And here to discuss that are two deal sourcing professionals who are mastering this strategy. So I'd like to ask both of them to introduce themselves and give the background on their firms. Eric, your slide is up there, so let's start with you, and then we'll hear from Andrew.
Thank you, Nick. I'm Eric Starr. I'm a partner with CapX Partners. And over the years, I've really focused on developing our systems from a technology standpoint to facilitate scale and to improve operational efficiency. We are a lender as opposed to an equity investor with a niche strategy in equipment finance. But like everybody else, like all other capital providers in the middle market, we are constantly searching for new ways of finding opportunities to deploy capital. So while and you'll hear from Andrew momentarily, we have very different strategies our need to find outlets for our capital is essential for the growth of our business. So I've been focusing on finding new and innovative solutions to solving the deal source challenge.
Thanks, Eric. And Andrew?
Great, thanks for having me, Nick. I'm Andrew Albert, a vice president with TVC Capital. I'm excited to be here to talk about our sourcing program. Our firm focuses solely on investments and acquisitions of B2B software companies that have not been highly dependent on earlier rounds of funding. I like to position us, I like to say that we're growth equity for smaller software companies that are not necessarily targeting an IPO. We tend to sit between venture capital funds and traditional growth equity. Traditional growth equity meaning typically deploying 25 million plus into a deal to a target company with revenue of 20 million plus, where our target focus is deploying somewhere between 8 and 15 million into a target company with revenue between 5 and 15 million. TVC's founding partners were previously software entrepreneurs with successful exits, so that helps us establish a shared connection early on in the sourcing process. And I joined TVC almost 4 years ago and wear a lot of hats here, but majority of my time is spent on investment thesis generation and managing an outbound team to initiate conversations with what we call ideal investment profiles based on certain macro and micro software theses that we've developed in-house.
Thank you to both. And so I gave this some thought. Before we get right into it, I want to start this conversation by first outlining the challenge that you're probably experiencing as a deal origination professional. And so, as I said during my preamble, the first thing to know is that there is just an unprecedented amount of competition in the market today. It is really unprecedented. If I could turn your attention to that left-hand graph that should be on your screen, you can see that the number of PE firms hunting deals has risen steadily each year for decades, and now totals something like 8,000 firms out there competing for deals. And then what's more is that if you're a private equity buyer, you're also facing more competition from the other end with corporate strategics. And the bad news there is that more often than not, they're willing to pay more for the deals that you are both competing for. In fact, I can put some hard numbers on that, because I pulled some data from PitchBook and found that the value of corporate VC deals alone has skyrocketed over the past several years, to the point where last year in 2017, strategics accounted for $51 billion worth of the deal activity out there. Now, it should be noted that that data also said that the number of corporate VC investors out there, the number of players is actually still relatively small. But that number has doubled to 262 strategic rivals in the past 4 years alone, and I would expect that number to continue climbing in the years to come. So you take that trend and you couple it with the fact that there's also this powder keg of dry powder in the market. I think the estimate is 1.7 trillion, though I've seen some estimates put it at about 1.2 trillion. Either way, LPs are still optimistic about the asset class. They're still pumping money into buyout and private equity funds. And what that means is that you have all the makings of a market in hyper-competitive mode. Now, this would not be a problem if there was also this corresponding surge in deal activity. But rising valuations is keeping a lot of this cash on the sidelines, as I'm sure many of you know. And then there's a simple fact that the number of target companies for buyers to pursue, that's not growing in tandem with a surge in capital commitments out there and the number of buyers on the field. So it's not as if all this money being poured in the asset class and all these new strategic investors means that there's tons of more deals for any one of you to hunt after. There's just going to be more competition. Now, buyers are adapting to this new reality by doing things like targeting more corporate carve-outs, or they're building through add-ons. But really, as I've been saying, the reality is that deal making is just getting harder, and it will continue to get harder so long as the private markets continue to outperform public equities. So why are we here today? It's not all doom and gloom. What is the solution to all this? Well, for that's where I'm going to bring in Eric and Andrew, who have faced the same challenge, and they have revamped their deal sourcing strategies in response to the trends I've just outlined here. And Eric and Andrew, before you describe your watch list 2.0s, the way I like to start this conversation is, give us a feel for what your watch list 1.0 was, and so what, and really what a lot of people are still probably doing here today, and I think that will help us even better crystallize the pain points that many are experiencing. So whoever wants to kick us off, if just a description of your prior deal origination strategy.
Yeah, I'll chime in here, Andrew. So I think for those of you that are all on the call, you're probably doing things that are somewhat sophisticated. If we go back in history, you're probably familiar with collecting business cards and putting them into a Rolodex or some sort of binder, and then following up with those people that you meet along the way to try to establish relationships that may hopefully lead to deal flow. That obviously got disrupted with the growth in CRM, the likes of Salesforce and what have you, to really facilitate the or organize and professionalize business development in a way that had never been done before, where you can actually track and monitor and follow up with everybody in your network. But that's really what 1.0 looked like. Was you had your network of people in your CRM, and you were tracking those people with how often you touch them, how often you reach out to them, how many deals you see from them, and trying to create this deeper relationship by using technology. And that's kind of as far as many have taken deal sourcing. There are other platforms that have developed over the years that claim to provide deal flow opportunities to capital providers, and that's more of a recent evolution over the last several years. So those platforms also exist. What I would argue is that the developments in deal sourcing, it's not an or game, it's an and game. So clearly the CRM that you develop and the approach you take for managing your network and growing your network is important to continue to do. Participating in some of these platforms that generate deal sourcing, deal flow, you can try it. We've participated, continue to do so in some of these platforms because it may lead to some opportunities. So start with one, add on another layer, and that's where we are today, really, a combination of CRM and deal sourcing platforms. But in order to now move to the next level, that's where I think some really exciting new technology is coming to bear. Andrew, I don't know if you have anything to add on sort of a look back on where we've come from.
No, I mean, not so much on the history of the market, but I'll just share sort of TC's story. I joined about 3.5 years ago, and we had a limited outbound sourcing approach. One of my colleagues who's been here for a couple of years before me had really laid a great foundation with the Navitor CRM, but sourcing was only about 20% of his time. He was also working on our existing portfolio companies and putting a lot of operational processes at the firm. So it was more of an afterthought, and that was why I joined the firm. So I had a nice foundation, but really needed to build a program from scratch. And like Nick mentioned earlier on, I had no history in doing this, and my first thought was, okay, let's look at conferences and dump those into Excel and use Crunchbase and LinkedIn and sort of assign that to the team to start going through. And I realized very quickly that was inefficient and not going to scale. We were about 8 professionals then, and next year we're launching a $200 million fund, and we'll probably grow to about 15. So we needed to put processes in place that allowed our technology investments to scale and those processes to scale. So that's when we started investigating other tools. And what we decided to do was try to model our business like the way a lot of our B2B software companies go to market in their sales and marketing functions. So we've created a funnel, and then we've dissected that funnel, and we're using various technology tools at various points of that funnel. So we have top of funnel, mid funnel, and bottom of funnel, and different tools that have more sort of bang for their buck at those different segments. And then we've connected them all together through either data integrations that DataFox and Navatar have, or certain workflow processes that we've set up that we think we can add, double and triple our team and not have those processes break down.
And before even moving, sorry, go ahead, Eric.
I was just going to add, one of the things that we started down the path on a couple of years ago at CapX was something called Deal Flow 10X. And that was, okay, so we're doing some pretty smart things with CRM and with certain data providers. But what we want to do is how do we grow our deal flow, not 10%, 20%, but 10 times? How do we do that? And that might have been a little bit ahead of the market because we didn't really have the answers, and we had the idea that this is what we want to achieve, and then we would constantly survey the market to see or wait for the market to catch up and provide the tools that would allow us to achieve that 10 times deal flow. So this is something that's been a work in process for CapX and will continue to be so. But for all those that have joined the call today, I think we're all eager to figure out or learn the little tricks of the trade that can help all of us achieve that deal flow 10x.
Yeah, and going before even moving on to some of the specifics of the watch list 2.0, help me get a better understanding of the old approach too. Would it be just having junior associates hammering the phone and throwing darts at a map, hoping that something stuck?
Yeah, I mean that.
Yeah. Go ahead, Andrew. I have some ideas there too.
Yeah.
Go ahead,
well, I was going to say, I think you hit the nail on the head earlier in the call in that there's just too many firms that are doing that, and even if you get someone to pick up the phone, what we've found is, they're not having effective conversations right at the onset and not establishing credibility that the firm is knowledgeable and works in that space. Potentially, I mean, I don't want to throw every junior associate under the bus, but so we've taken the approach of being very targeted in a particular vertical and area and doing a lot of research and work ahead of time, myself and my team, so that we're knowledgeable. When we do make that connection, we establish credibility right away. And so our emails are fairly crafted and referencing a lot of very detailed information about their business as well as the industry. And so you can't boil the ocean with that approach. So we have to be targeted and use these deal sourcing technologies to gather as much information as we can before even doing the reach out. I mean, it's no different than the B2B sales process where your buyers are doing so much work ahead of even talking to the company that they're looking to buy something from.
Yeah, we had a pretty different approach, and that was we were really developing relationships with what I'll call owners and intermediaries. So as a lender, in the growth capital equipment finance space, we were really trying to partner with the private equity sponsors that own these asset-heavy businesses that need our kind of capital to grow their business. So we have developed a very deep network of sponsors. And similarly, what we would have is we would go to conferences and reach out to sponsors we don't know, try to meet with them, and just to develop that personal connection. And that got us a great deal of success. But when you look at where do we go from here? How do we rapidly grow our business beyond the relationships we currently have? The answer was, well, let's go directly to companies. Maybe they're sponsored, maybe they're not, but there's a multitude of potential companies out there that we can reach out to with a targeted message, but we want to know who they are and reach out to them at the right time, such that our capital is filling a need at the time in which they need it.
And Eric, that approach, is it relying less on intermediaries then? Are you taking more control over when that reach out happens by avoiding that part of the equation of intermediaries?
I wouldn't say no. It's not instead of. Again, I'll get back to the word and as opposed to or. It's not as though we're doing less of the of developing new relationships among sponsors or investment bankers or commercial lenders or accountants and attorneys, we still do that. Now we're layering on a new component to the process that will, that continues to help drive deal sourcing, and that is what this watchlist 2.0 is all about.
Right, and let's dive deeper even into it then. So a few times now we've mentioned a better ability to target the right companies. I like Andrew's you can't boil the ocean analogy. Let's elaborate on that. What would be some of the signals of intent so that this company is worth reaching out to now as opposed to this other company?
So I'll start on this one. TVC Capital is fortunate that we have a very focused strategy, so that at the very onset, I have some criteria that helps me filter down to an even smaller subset. So as I mentioned at the beginning, we're only focused on companies doing between 5 and 15 million of revenue that are lightly funded or bootstrapped, that are B2B software only. We can usually get a sense of revenue levels by looking at the LinkedIn employee headcount. So right then and there, we've already filtered down a lot, and then we focus, we try to focus only on mission critical businesses. So real core systems across many verticals, and less so on the MarTech side or things that have higher churn rates. So we boil down with that criteria, and then it's really developing these theses and mapping out a particular area. A quick example I'd give is that we had this idea that a couple of years ago that all of the money that was being raised by these software companies and venture funded companies, predominantly was being put into sales and marketing in this particular technology cycle, as opposed to the previous internet bubble where it was going to Sun servers and hosting. And this was not a thesis that we came up with. Everyone knows that, but we thought that over time, the diminishing returns to those direct sales and marketing investments would decrease, and that companies would start looking at the channel to continue their growth, no different than the IT world of 30, 40 years ago. So we started really investigating the channel management software arena. And 2 years ago, it just, as you know, the funding environment has still continued to support direct sales and marketing investments. So that hasn't played out, and we haven't made an investment. But these are the types of things that we're doing, where we'll have a thought like that and try and explore it further, map out the space, and then target the companies that fit the profile that I mentioned just at the onset.
And again, CapX is not too different, although our strategy is wildly different, in that so for instance, take DataFox, for instance, where we have information on over 2 million businesses in the US and globally. And what we can do is quickly identify which of those 2 million businesses might be right for our capital. So we know what industries we prefer, right? We're looking for asset-heavy businesses that need to buy new machinery and equipment to grow. So we're looking for those types of businesses within industry. We also know how large the companies that we've been successful funding in the past are. So we can look at employee counts and revenue, the size of revenue, and filter down this large ocean of companies into a manageable number. And then we can look into insights like, did they launch a new product? Did they hire a new management team? Things like that to predict the timing of when they might need our capital. So it's really a two-step process. What types of companies fit our criteria? And then is the timing right for us to reach out to them at this point in time? So that's how we use some of these new information, insights, data to help improve our deal sourcing.
Yeah, and let's
and just to take Eric's thought one step further, I think, I'm guessing when he does reach out, when he thinks that he has nailed the timing, the message is very crafted around that particular event or signal, And what it shows to the company, to the target, is that, wow, these guys are really paying attention to us. This is not a generic blast and they maybe got lucky with the timing. They've recognized series different milestones in our business, and they understand the cycles that we go through.
Absolutely.
And so how exactly are you aware when one of these developments happen? If they do reach if they hit a stage of growth that now matches your investment criteria, or let's say they open a new office, whatever it is, how exactly do you know without having to Google search the 10,000 companies or whoever may be on your watch list?
Well, I'm still a little bit in the dark ages there. I use a tool that a lot of people use, but it tends to work very well. It's just Google Alerts on, the top quartile of companies in our pipeline. But I would like to utilize the signals aspect of DataFox a little bit more and investigate some other tools to really amp that up a little bit more. I think I'm not necessarily the power user of Navitar and DataFox. I got a great team underneath me that really knows the ins and outs of both these tools. But so I think when we scale to this next fund and have a bigger team, we're going to utilize the signals even more, and I can push some of that responsibility down there. But I actually enjoy really staying on top of the top 25% of our companies that we're most interested in. Picking up a local newspaper story about growth into a new bigger office or something like that. So, but that's our rudimentary tool that we use today for a lot of that.
Yeah, so there's a lot of alternative data sets that have become available. Figuring out or navigating that universe of data sources is a challenge, and is sort of a project that it's an ongoing project at CapX where I'm always looking for data sources that can help improve our processes, whether that be from credit portfolio management or, of course, from deal sourcing. Within DataFox, there are some of these insights. They're scraping news all the time and using AI and machine learning to update their information. So as soon as that data hits the tape, it updates in the DataFox data set, and that flows right through to our data set or our potential candidates, and a company will float to the top as soon as an announcement is made. Say, let's call it a manufacturing company that announced a new customer or a new product. That might result in the attractiveness of that business being higher than it was the previous day, and now we can go out and call them or reach out to them with an email saying, hey, we saw you did this, you might need our capital. So that's how we stay on top of those things from a systems technology standpoint, is just integrating Navitar with DataFox and generating these company lists on a daily, weekly, monthly basis.
Yeah, and I think that's an important point that you raised, Eric. I like the phrase when a target company flows up to the top, because it is the case that many people here will have thousands or tens of thousands of target companies on their watch list. And if our argument is you can't just crank out the calls and hope that something sticks, if we could discuss more about what goes into your lead scoring process so that you are targeting the right companies at the right times. And Andrew, that's an open question to you as well.
Yeah, but I will tell you, this is a work in process. I know where I want it to be, and it's just not there yet. Ideally, I want my account scoring or whatever number you're assigning to these potential candidates. I would love that to all be done with AI and machine learning. Right now, it's still an iterative process that's a little bit manual to try to identify the top candidates based on some things that we kind of think are right. So we look at a host of different criteria, and we weight them accordingly. And when the criteria changes, the score will change, and it'll either move that company up or down our list. And if it hits the top end of that list, we'll reach out to them. but that is still a work in process to get that to be perfect. And is probably I would argue maybe watch list 3.0.
Yeah.
Yeah, I'll add, we are even way before the work in process when it comes to developing our own signal scoring and creating that type of functionality. I think it certainly makes sense in terms of the direction of where this function needs to go, but we're not there yet. Small team, and maybe with the larger resources in the next couple of years, we can devote time to building that. But I'm also hesitant to do that because if it gets too good, then maybe I'm out of a job.
Well, so for right now, we've been talking about when it makes sense to reach out over email and when to reach out over phone call. What about the old school approach of shaking hands at a conference? Because part of this watch list 2.0 is also that just like there's many watch list target companies, there's many conferences out there. I think a LinkedIn study put it at 3,000 alone in the U.S. So how you also place yourselves at the right conference at the right time? Is there any strategy behind that?
I mean, for us, there is no right conference at the right time because, as you mentioned, there are so many. I mean, what I tend to do is only go to a conference if I'm working on an opportunity that's very late stage in our pipeline, meaning we're a week or two away or have already issued a term sheet to the company. And I'm really doing final diligence on the competitors and the landscape and all the talking to all the consultants in the industry. At that point, I'm very knowledgeable on the space, and my use of time is very effective there, as opposed to randomly going to a conference in a space that I'm interested in. I just feel like I don't do it, but if I did, I feel like I'd be wandering and not having as effective conversations with each of the companies or the participants in that particular area. So, but the great thing is that every quarter, every vertical or segment, there's a conference just about every quarter in that particular space. So timing is usually not an issue where you might be working on something and a major conference around it is not for another 8 months. So I don't know if that's a good thing or bad thing, but as you mentioned, there are a ton of these.
I think the jury's out on the conferences, to be honest. I'm not sure. I mean, look, it would be great if I went to a sort of an industry conference where 10, 20, 30 companies that might need our capital because we've identified them are all going to be there. And if they are, is that a good use of time? I don't really know. I think I'd rather have that lead much warmer than just showing up at a conference and hoping that we find somebody that needs our capital. That being said, there's another whole use case for conferences, and that is to go as an attendee and learn something. I'm a big fan of that. I don't know if it's necessarily the best bang for our buck just to show up and try to find companies that may need our business, may need our capital.
Yeah, and I think that's one of the central tenets of our story here. Of that, if part of your deal sourcing strategy is to just try to catch the right conference at the right time, you're leaving too many things to chance or luck. Same thing with your target companies. If you're looking to just cold call as many of them as possible, if you're not tracking what's happening with them news-wise, like office openings or CFO hires, there too you're leaving too many things to luck. And I appreciate that throughout this conversation we've kept things at a conceptual level. So what I would like to do is ask Navitar's COO, Ketan Kangar, to throw some paint against the canvas here and actually show us specifically what those processes look like. So, Ketan, I'm going to bring you on board and switch over presenter rights. And if you could just give us a 5 to 10 minute look at what this looks like from a visual sense.
Sure, happy to do that. And I thought, kind of in the spirit of the topic that was covered, I can focus from a technology perspective on the intersection between Navatar and DataFox. Both of these systems were mentioned by the speakers today. Now, some of the themes that you've already heard of, one was around kind of being very targeted. So being able to identify and kind of make sure that your watch list is based on a solid criteria. It could be whatever kind of the investment criteria and the strategy is that you're following. But being targeted, secondly, was getting intelligence about each of those companies so that when you're actually reaching out to them, uh, it's relevant, it's timely, and the message that you're sending indicates to them that you've done your research and it's not just a random outreach that you're doing. And then the third aspect we heard about today was around knowing, kind of getting intelligence on the fly about these companies. Right? So people mention events and signals, but it's around any important news about a specific company that's on your target list, or sometimes it could be as Eric mentioned, late stage company. Yeah, you have a chance to meet them at a conference, just finding that out and making that trip. So I'll take some simple scenarios and give a visual indication of how that works within Navitor and DataFox. So the first concept was kind of everyone wants to get to is the concept of this watch list, right? So the ability for you to have a list of targeted companies that you're reaching out to. But more importantly than the target companies is making sure that you have the right information about them. Right? So this is obviously what you're seeing is a list that is already has all the right categories and everything populated in there. A lot of this data comes in from DataFox, right? So when you develop a watch list within Navatar, you have the ability to bring in all of this information so that when you're working with the watch list and your targeted list of companies, you do have intelligence and data about these companies already on their profile. Now, how does that get there? Let's say if you're adding a new company in Navatar, right? So we'll go ahead and if I can type correctly, so it allows you to quickly search a company. It'll do kind of searches on Google, figure out the website, etc. You can easily go and add a new company within Navatar. What happens is if you also have, let's say, a DataFox subscription, it will automatically tie this company record into DataFox and pre-populate some of the information for you. Right? So now that I have, all I did was enter the name and it automatically found the website and the company is now set up in here. But now when I'm looking at the company, if I scroll down, you will see a section for DataFox. It'll connect into DataFox and populate all and show me intelligence about this company right within Navatar. Right. So the real power of this is that kind of when you're adding any new company on your target list, right? So you'll now see found the company. I can see its history. I can see it's had several rounds of funding. I can see information about their investors. Right. So now, if you apply this to your watch list, every company that you're adding to the watch list, you now have the ability to get this information in here. Now, secondly, and now we'll go into an example of a company that already exists. So we talked about the fact that you do need intelligence. You do need to know what's going on in the company. So like in this example, Alliance Science and Tech. Again, if I scroll down, I have all this data already populated through DataFox. And that's helpful, and I can use that to slice and dice and kind of do analysis on my watch list within Navatar. But what I can also get is there any are there any triggers, any signals in the recent past, right? So if I click on signals, I get to see, okay, they announced a new initiative, they won a major customer, right? So you have the ability to now look at all of this information, and sometimes it could be they hired someone, it could be they signed a strategic contract with someone, maybe they're opening a new office in a specific location. All of this is aggregated here. And not just that, you also get this information in your email, and through Outlook, again, you connect back into Navitor. So there are different ways in which this information can be proactively fed to you so that when you're looking at any company, you do understand what's going on, any newsworthy article about the company, and that may form a basis for you to reach out to these companies too, right? So if it's a new initiative, if you happen to be involved or aware of this could be a reason to reach out to that company. A third example, again, we'll switch companies here. A third example is around a conference. So if, let's say I'm looking at Vertica here, and if this is a late stage deal, and again, I can get to DataFox, and when I go into signals, I can see that they are participating in some of these conferences. Now, part of it going to the conference is the ability to meet with Vertica if it's a late stage deal. Another part of it is I do need to have some sense on, if I go to this conference, are there other companies that are on my target list that could also be participating here, right? So if I click here, it actually takes me directly into DataFox, shows me the information about the conference. So I can see all the attendees and sponsors and exhibitors. But from my perspective, if I'm looking at, apart from Vertica systems, do I have the ability to to meet any other companies from my watch list? I do see a complete count here, so it tells me that there are 39 other companies, and I can actually go and look at that list of all the 39 from my watch list who are also attending this conference. So this gives me a better sense, and I have more data and intelligence about, in this case, a specific conference, to figure out whether it's worthwhile for me to go and attend this. And if I'm there, and again, if I see some companies that we're not tracking, I can easily just select any companies from here, click the sync button, and it will download profiles directly back into Navitor. So the integration, kind of what I focused on, was more around the interplay between DataFox and Navitor. Obviously, I could go into DataFox, create my own list, do my search of target companies, and download that entire watch list into Navitor. That's maybe the starting point in terms of how you begin with this process. But once kind of the two systems are connected, there are all these different ways in which now you can utilize the technology to essentially supercharge your sourcing efforts. With that, Nick, let's see, maybe we can go into audience questions next.
Yeah, we do have a couple that have come in, and Eric, it seems like one person had latched onto your watch list 3.0 comment. If there's more that you could elaborate on what you're trying to build or what you expect to come in the future.
Yeah, happy to talk about it. So again, as I mentioned very briefly, we kind of know what types of companies we've had success with in funding and what kind of returns we've generated from different types of businesses that go deeper than just industry and revenue. And we can take all of that business intelligence. Well, what we want to do is take all of that business intelligence and convert that down into an algorithm that can help us identify other companies that are very similar to the ones that we have done very well with in the past. And that algorithm that's built on, we think about that algorithm being created through machine learning, it gets better over time, can really help fine-tune this watch list into something that is very powerful for us and really creates a wonderful target of potential companies to whom we can deploy capital. So that notion of AI, machine learning, and deal sourcing is coming. We're just not there yet.
So we will lose our jobs to the robots after all, is what you're saying.
You know, I laughed when Andrew said that before, because I meet with my team every Tuesday, and one of the messages I say to them all the time is everything we do in here is to put ourselves out of a job. Now, that's a little tongue-in-cheek, but what it really means is, how do we increase say, our AUM tenfold and increase our employee count 10%, right? That's the types of scale we're looking to drive. But at the end of the day, there will be winners and losers. CapX wants to make sure that we're winners.
Andrew, anything to add? Otherwise, we have time for one last question.
Yeah, no, I think I'll just add quickly. I think it's interesting that you're trying to do a look back on returns basis. I think that makes a lot of sense. For us, we are trying to, we have tried to develop a niche as well in that, this, like I said, growth equity for smaller software companies. So our way of trying to differentiate or be in a less competitive environment is to find that particular niche, because there are tons of venture capital funds and tons of larger growth equity funds. So that's the profile that we're trying to fit, and Eric's trying to find a historical successful returns profile, which I think is a great approach as well.
One last question. We have somebody asking how big is your watch list after incorporating this technology? If I can paraphrase that, are you monitoring less companies by using these tools, or does it remain the same and you just have a better way of targeting your warmest leads?
How big is it? I would say that it allows us to understand much faster if the company is an ideal investment profile for us. So we're able to filter away the companies that aren't good profiles faster. I'd love the list to be as large as it could be, and that means that there's so many opportunities, but that also means that the top of the funnel is that much bigger. So, that's why this technology is essential to what we're doing. We want to make the top of the funnel as big as we possibly can, so that the bottom of the funnel is nice and fat as well. But so that's what's key to us. I'd love it to be as large as it could be.
Yeah, it's kind of like. Go ahead, Eric. Sorry.
I was going to say I agree.
I was going to say, it's kind of like you're still casting as wide of a net as possible. You're just making those mesh holes bigger so that you're only capturing the largest prizes. So that's all the time we have today, and it looks like we got through everyone's questions. If you have any questions that come to you later on, by all means, get in touch. You can see contact details for myself, as well as Andrew and Eric, as well as a representative from DataFox. We'd love to hear from you. Also, if you like today's webinar and are eager for more thought leadership, I encourage you to check out navitargroup.com. That's navitargroup.com. We've got a number of webinars that cover deal sourcing, and as well as the other side of the firm. So we cover fundraising. We've worked with ACG. We've had conversations with SEC officials about scary things like compliance. They're up there on the website. So on behalf of Andrew and Eric, as well as Caton and Delaney, I am Nick Donato, and enjoy the rest of your day.